Hey, this is Jeff Scott. I thought I'd do a very quick video today. The last 2 weeks I did live webinars on Monday nights. They're both been sent out as email. They were not, I don't think they were placed on YouTube because it was sort of different than what I usually do. Last week we also introduced Cigar from Superior Profit, who I thought did a great presentation as well. I'm going to go very quickly today. I am traveling the next 5 weeks, so you may not see another one of these until May. Or April rather. The last three could have done once because nothing's really changed, but I'm sure things will change before then. I entitled today, Slowly Climbing the Wall. Not really a wall of worry per se, just a slow climb. This is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm truly independent. I pay for everything that I use. Therefore, I am not going to give you a biased view because someone's paying me. I have biases, but it's because I'm a user, not receiving feedback from anybody. Trading involves risk. You and your owners solely responsible for investment decisions you make. I always start with this for those that walk in new. I started with CanSlim, improved by Morales and Catcher. This guy here really was my biggest influence, Ian Woodward, who helped me learn how to find great stocks and how to stop playing chutes and ladders with my money. Ron Brown became his partner in Woodward and Brown Investing. George Lee, he does a number of live sessions throughout the year. Whenever possible, I try to join him because I find I learn from him every time I'm near him. Pierre Van Tharp, Position Size and Money Management, and Sager Navy from Superior Profit down here. Very cool way of trading. He's got some indicators that are very additive to what I do. I wish I could get him into HGSI. And something that I talked about on the live webinars, you'll probably be hearing things soon about paid add-ons where I'm going to actually help a little bit and try and get some of the people I work with to actually join as a guest creator for HGSI and create add-ons that you'll require extra payment plus owning HGSI. They'll be optional, but it's a way to get outsiders to both enhance the program with their tools, but also to enhance the marketing by talking about it to their audience. I have a lot of programs, as I always say, TradeStation, Thinkorswim with all my various indicators. Genesis Trade Navigator is a great platform. It's just expensive. Most people don't need it. HGSI and EdgeRater are my key aftermarket analytics. Superior Profit has the Q Edge, which I use as well. Yes, I follow seasonality, but technicals trump seasonality. Here's the website for HGSI for those that don't have it. Key point is you get a free trial, no credit cards asked. And under investing strategies, you'll see hundreds of videos from myself, Ron Brown, and others. Where are we on the cycle? Gosh, are we back in stage 2 and we're going to run to new highs? Or are we getting near the top after this very ferocious run off the bottom? I don't know. You don't know. However, I think we're closer to a top than we are to a bottom. And for me, as I'll mention later, it's not an all-in phenomenon. I am still long. However, I have raised cash, have less positions. Now, I could miss a blow-off, and that bothers me a bit. But I'm okay with that. What I don't want to do is have the market pull back and not have any cash to take advantage of it. Imagine if you were all cash on December 24th, how you would be doing right now. I'm not saying to go all cash, but have some powder on the side because this market will pull back. Not Friday, though. This is a Friday. Sector review is a very strong day, I think, driven by some Chinese headlines and the economy being a little weak, but not too weak. You can see there's strength everywhere, a little red on staples, perhaps. These are just the various S&P sectors, materials, energy, financials mixed, industrials, technology, consumer staples, consumer discretionary, utilities, healthcare strong, communication strong, and real estate, and a couple foreign markets. So I like to look at the components during the day. It doesn't use up much of the horsepower trade station, and it gives me a sense of what's working and what's not. From a what's working perspective, I'm not even going to go into the individual charts. You see the same thing, big moves off the lows, closing at recent highs on pretty much everything. and breaking above the 200 and all the four indices in the futures, E-minis, NASDAQ, Dow, and the Russell. The VIX continues to meander down towards that area of complacency that we saw much of 2018, and the dollar is floundering here, but still above the major moving averages. On the weekly, you could see how fierce a pullback we've had and how close we've come to getting back to where we started. There are those that wonder and talk about us hitting new highs here, and we certainly can. We're not that far away, but we've had big moves off the bottom. Rates actually didn't do much, perhaps a little nubbin higher. So they're pretty stable, which is good for the markets. I like being below 3.2 on the 30-year and between 2.5 and 3 on the 10-year is when I seem to make the most money in the stock market. The yield curve continues to flatten. It's when it flattens, gets inverted, and starts to get better when the market turns down. And when I look at historically, a weakening yield curve hasn't been the end of the market. AD lines, this is interesting, folks. Notice in white, the AD line for the Russell 2000 and the 1000. I've just got the S&P 500 here. I should probably change them to their own indices. That wouldn't be that difficult. But notice new highs on the AD lines. If I look at the NYSE AD line, we have taken out old highs. Everything on the ETFs, the diamonds, Qs, spiders, Russell, and real estate going up. The only thing not participating, and no surprise if rates went up a little bit, is the price of the bonds have dropped some. Now, bearish breadth remains strong and probably a little too hot short term. These are the number of stocks above the 40-day. The stocks above the 200 are not quite at 50%, but when you get above 80% above the 40-day, that tells you you're starting to get hot. And if we look at the T2121, 3-month new high, new lows, we spiked about a week ago, maybe 2 weeks ago. We're still high in an area where you don't expect a lot more price appreciation. McClellan's, maybe we had some zero line rejects here, but I don't see any signals here that would scare me. The weekly zero line reject as well. Those are bullish as well. Buckets show how bullish we are. 83% of the stocks are above the midline. You could see a shift to the right where most of the stocks are in the upper half of their Bollinger Bands. Only about 12% above the Bollinger Bands, which tells me we're not too far extended there. I do not expect to see a Hindi for a long time. You've got to get to new highs. But notice this. We're starting to see more new highs on the green, which is new highs in the NASDAQ and the NYSE, and new lows are getting smaller and smaller. Look at the change from where we were before the market turned around. Market tone decidedly bullish. In fact, this is probably since December 26 to date, one of the longest steady streaks of green that we've seen in a long time. This brown and yellow here just showed how volatile the market was, and even the volatility seems to have abated. Sector strength, what's not working, it looks like, is that industrials, or is that, it's got some stuff on it. I think that is industrials are the only thing that's in yellow. So the sectors are doing well as well. You know, the canaries are clearly underperforming where the major indices are above the 200. The canaries are going sideways, so that probably tells you where money's not flowing. News and earnings this week, Powell speaks on Tuesday and Wednesday. Gee, that's gone from, I'm certain the market's going down days to it's actually been good. We'll have to see. GDP on Thursday, jobless claims Thursday, and then some other important information, ISM, income outlays on Friday. So I would say that's a big news week. If I look at earnings, I've got Etsy on Monday after the close, Hertz, Mosaic, Steak Shack, MedPace, a CRO that's been moving. Big days, lots of earnings this week. Palo Alto on Tuesday after the close. That'll be big for the computer security crowd. Billy, Teladoc, some Squares, some darlings. Carvana has been doing well. JD on Thursday. Busy week, not the big guys, but a lot of stocks that we usually trade. Market thoughts, still driven by news. The Fed put seems to have quieted the bears. Markets in record territory from the perspective of number of weeks up in a row. And we've retaken the 200-day SMA. Talking heads are getting more bearish, talking down the economy and slowing earnings. Bottoms up review shows more and more stocks getting past 35 points. So, we're at a point where we may go on to new highs, but I'm not seeing this as an opportunity to go all in. I'm long, but still some cash, and we'll raise more product for the inevitable pullback. So I'm going to do a brief top-down review. I didn't want to make this an all-day affair because I got things to do, and I'm traveling the next 5 weeks, and I got to get packing. So back to the story. I could go through all the indices and TradeStation, and what you would see is a total change. Here's the E-minis, PPS buy signal on the daily and on the monthly. The weekly should be close. I don't know why it hasn't turned. I don't know why it hasn't changed. That's a bit of a surprise. Notice the green price bars on the weekly and monthly showing the strength there. We're not extended. Still looks pretty healthy. NASDAQ, very similar, but doesn't have the buy signal on the monthly. The Dow has a buy signal on the monthly. Weekly still has a ways to go. It just doesn't make sense. Just wonder. I don't know. I can't explain it unless it's underneath this bar and we're not seeing it. And then the Russell 2000. So they look strong. The dollar, this is something that's been a big contributor. The pullback of the market, I think, helps. Pullback the dollar helps the market. And you could see longer term, the dollar has been strong. All right. Let's go into HGSI very quickly. Let's go into market analysis, major markets plus, hit warehouse view. You'll notice I have 25. Most people have 23 unless you add. In fact, I haven't added it here, so let me add it right now. I have added to this. I added the RUT, so I have a Russell. Sure, it's in there somewhere. IWM rather. And I'm going to add the 50. Oops. Which is like the IBD 50 fund, because that's kind of like the canaries, and we'll see. So there's my 25 that I follow in this, and we rank them by T1. As I've said before, when mid caps and small caps and the NYSE are up on the top, I'm usually making money, even if the S&P is in the middle. Volatility in dollar on the bottom, gold, despite a weak dollar, although it was up 1.2% on the week. Let's take a quick look and see what we see in the markets. So the S&P 500 is getting up to that 76% retracement. Do we go all the way back up and break out? It's starting to act that way. I've not been a believer of that. And those who've watched before know three-road scenario, we go straight out to new highs. We break down from here, or we do a little bit of what we've been doing, which is, and then we either break up or break down. So high road scenarios, new highs. Low road scenarios, break down and new lows. Most likely we're going to continue to go sideways here. Now, when I look at where we are today, we have been going sideways. It feels like the ascent has slowed down some. And I'm not sure that that's going to mean anything and whether we're changing our tune, but it does look to me a little bit different here. The NASDAQ composite up at the top, you can see it broke above its 200. Again, is it going more sideways here than it was here? Feels that way. Same three-road scenario. The Dow Jones Industrials have been the leader, interestingly, well above their moving averages, running right up the 8-day. That's very bullish. At some point, I would expect it to turn around. And the Russell 2000, which had been the laggard, has, I believe, this on the futures, the Russell has taken out its 200, and it has on the cash. So markets here look extremely favorable, although I do think we're at risk of running out of steam, and hopefully we'll go sideways, which frankly would be quite healthy. As we talked about, the dollar has weakened, but notice it's still above the 17, the 50, and the 200, and notice the 17 crossing above the 50. So That's some bullish underpinnings to the dollar there. If I look at volatility heading back down, this is where it used to live, so it's up about a couple points, but certainly there's not much volatility in this market. And with the dollar easing, gold really isn't doing much. If you look at on the week, I think we had a Monday holiday, so I'm not sure we had gold on Monday or not. That's Friday. So on the week, it closed a little bit higher than it opened, or than it closed the prior week, but it had been a little bit higher with the dollar when it was weaker. Silver, not much going on there either. Oil has been a big mover. I don't always talk about the oil fund, but you could see how oil has moved off the bottom since the December lows. So again, I said it earlier, I feel this market wants to go higher. I am not all in, although I have definitely pointed low, and I've just got more cash on the sidelines than I normally have. Next thing I look at is number 7, the industry groups. And you can see I've got 174. If I look at 2-day force up, I got 81 short-term moving up. I've got 2 packaged food and beverages moving down. If I look at a little longer term, 5-day moving down, I've got 8. That's still not much at all. 5 days moving up, I've got 83. So we've got a lot of groups that are now sustained more than a day or two uptrends. That's kind of exciting. I like looking at what's there now, sorted by combo. And I like to go down the first couple in each group. I'll go down maybe 3 or 5 of these today, and then we'll talk about some of the stocks I like. So speaking of one of the stocks I like, IQYI has had a huge week. I'm going to tease you a little bit. Now, let me be very clear. I am playing around with some new indicators. I am talking to some of my favorite gurus about putting those indicators into an add-on. I'm going to put that indicator on this chart right now, and for the purpose of secrecy, it is called, maybe it's not going to come on this, I don't have it in this computer. Bummer, I guess I'm not. Thought I put it on this. All right, what I'm going to do is I'm going to pause this, I'm going to import, and then I'll be back in a second. Okay, I'm back. So I just want to show you 2 things that I added. First of all, these are not available yet. Okay, so no one go call George and say, when do I get this? As I have used in Thinkorswim, where I often will put on the chart just see if it's on there. This is a chandelier stop. I got a lot on there, so it makes it hard to see. And I actually look for stocks who were in a chandelier sell signal and then get a buy signal when the sell signal converts to a chandelier buy here. So it turns out that George has been able to put the chandelier stop on our charts. That'll be in the next release, I believe, for everybody. The way I use this in Thinkorswim is if I flip, that's no longer in a buy signal. Now, I don't play with this intraday. Intraday, I don't care if I drop below it. It's where I close. And what I typically do, if I close below the chandelier stop, then I put my stop below the low of that bar. And then if I trade below that tomorrow, I'm out of my position. So we'll learn more about that later. Here is the chandelier. The little dashes might be hard to see in HGSI. As long as the dashes are below price or below the close, you're still in a okay to be holding position. When the dashes are above price, you should be thinking about being short or getting out of your position. That is a sell signal. All right. You'll also notice some green, and those are actually arrows. If I change my price type, I could probably do that. Let's do that real quick. I've never done this, so it may give me a second. should be easy. So if I just make this a open, high, low, close chart. You'll notice that the arrows will be quite easy to see, new sell and buy signals. I am experimenting with something that I use other places. It is not going to be available in HGSI for anybody for now. I am going to try and work with a specific guru to turn this into a add-on with more signals and scans. But I've been playing with it now to test it, and I've had a few changes I've asked George to make, including moving him away from price so I can use my candlesticks. Now, the other thing is I've actually paid for this out of my pocket in programming time, and my goal is to convince some of the quote gurus out there to start creating stuff, and I wanted an example to build out. But this is IQ. My son and I, we've both been in it. He sold his. I've been out of it for a little while. Now I'm kicking myself, and so is he. Had a Bible gap up on Friday. I think this is still viable. It's come down from 46, 47. It has had a big move up, but I do think, like I said, that it's still viable down here, and it's something that I'll be watching, and I'll have my stop underneath the beginning of the Bible gap update. Of course, I'd rather see it pull back in and get it cheaper, but this stock has been moving since after Christmas. Facebook, it was turned back at the 200. I have about 20% of what I used to have in Facebook, and I'll probably hold some just to hold some. But to me, this is kind of ominous, getting turned back at the 200-day moving average. Another one that I've liked a couple of weeks ago when it broke above the 50, it's retested, it's breaking out again, is another Chinese stock, HUYA, also in a buy signal with a Bible gap up coming out of a squeeze. So between IQ and HUYA, I see two things I'm very interested in. If I didn't see the name of the chart, and I think one thing I want to ask George to do is, can we actually show charts that don't show the stock name? Because if I did that, I might say, wow, it's been higher highs, higher lows since mid-December, broke above the 200-day moving average. Everything is great. That looks great. Problem is it snapped, and I just don't have any faith in their business model. But that doesn't mean I'm right. I also like Yandex, which is a Russian internet play. Not as clean as the IQ or the HUYA. Got above the 200s, gone sideways, had a new buy signal. My experimental buy signal come in on Friday with a kahuna in a squeeze. So that's something I might look at. So in this first group, there were two or three stuff. And I look in Weibo, I've talked about it a number of times. I've made a lot of money on this in the past. I've gotten in and then it's done this. It's come right back down. It really looks different this time. I think Weibo looks interesting as well. It's got earnings to support its price. Group strength has turned up. I think bottom line is several of these are Chinese stocks, and if China and the U.S. come to an agreement, they're probably going higher. Semiconductor devices, Universal, this is one. Let's go to a weekly chart. This one's got as high as 204, came down to 84. My guess is it must be in the Samsung new, they got the foldable phone or something, because they had a big move up this week. Maybe it was on the earnings. Yeah, it could have been the earnings. Bottom line is this stock has broken out, also viable gap. I decided not to chase this. It's gone from 80 to 145 since December. That's a pretty move. Intel, too slow for me, but it had a nice gap up on Friday. NVIDIA, a bit of a bottom fish. AMD, I have been in this one. It's a bottom fish too off the 200, but we've got higher highs, higher lows. Group strength is strong. Everything is green. And the time to have bought it was probably back here when we had the kahuna, the mobile breakout and squeeze, which is, for those that watch me on a regular basis, know that's what I'm looking for. Micron, I didn't go after this one, but I did comment that people usually start to accumulate this before DRAM prices go up. And you can see the group strength is high, and it's had a nice move, very nice move off of it. And Xilinx was one of the leaders, so leading. This is what I do. I go down the top groups, e-commerce, discretionary, Wayfair. Man, I kick myself in the ass on this one. Why am I playing Amazon when I could be playing this of late? Big Bible gap up on Friday, an internet retailer. Earnings per share growth sucks, but they're growing revenue, establishing a brand. Kahuna, Bible gap up, a experimental JAS buy signal. It's had a big move from it's a double since the end of December. Probably too far for me to chase it. When should I have bought it? I should have bought it here. That's the time I like to buy things breaking above the moving averages. This was another opportunity. Alibaba, well, that looks like the opportunity to buy. It's had a big move, 132 to 174. But if you had to ask me, is the stock going higher? Earnings per share growth is accelerating. Turnaround after some negative earnings growth. Earnings are already out. It's above the moving averages. I'm interested in Alibaba, and that means Altababa. JD.com, kind of like Weibo, slow rise up, new buy signals, Kahuna, pocket pivots, mobile breakup from a squeeze. Not a lot of momentum, but it's moving up. Netflix, I'm long Netflix again. Netflix, from 406 down to 225, 230, and now back to 364. I've been long Netflix for a few months now, and I still have a position, although I've taken most of my shares off the table. Amazon's kind of flat. Etsy, I would tell you that Etsy is an interesting stock to buy. And for those that ask me to work through how I would buy a stock, I'm going to make a few comments on it. Why do I like Etsy? And then I'll tell you why I don't like Etsy. It's clearly in an uptrend. It's sitting on the 50-day moving average. Group strength is going up. It had a buy signal on my experimental indicator, a pocket pivot, a Kahuna, a mobile breakout from a squeeze, and the bongo went green. That's good. Earnings per share growth are good. Big PE, got some demand. What I don't like about it is it's got earnings tomorrow. So let's pretend earnings are out already. Well, how would I buy this stock? So we'll look at Friday. It closed at 56.67. The high was 56.93. The PSAR data is a important thing to me because when it goes through that, you're going to have a signal trigger for Wells Wilder PSAR followers. So I'm not going to put a buy stop until I'm above that. So it's a 57.08. Makes it easy for me. I'm going to put a buy stop on Etsy if I'm not going to because earnings are coming out. All right. So I'm working through how I think. I would put a buy stop at 57, say 15. Now, truth be told, I am currently long in Etsy, and I'm going to have to make a decision what to do because of its earnings are coming out. But I do have some profits in it. Where would I put my stop on this chart? I would look at the low of the last 4 days, 53.51. Whoops, kill that. 52.22, 54, 54. All right, so 52.22 is a little bit more than I like it to be. What's the 50 at? 50 is at 52.42, okay. And what's the chandelier exit at? 53.21. So what I'm going to do is I want to be below that 50. Let's just put the stop at 52.25. All right. Now, this isn't a great trade setup because I'm risking $4.90. So that's about 9%, which is probably more than I want to risk. But this is how I would look at this trade. I'd have to decide whether I take it as stock or options. Um, I won't take it with earnings coming, but I'm going to check the stock on Tuesday morning, see what it does, and maybe, well, if I wasn't in it, take a position because my guess is it's going higher. I already have a position in Etsy, so I'm not going to take another one. But this, looking back 4 days for the lowest low, finding a chart-based reason to buy it, passing through that PSAR, using the chart to set my low, and then doing my position sizing based upon that risk. Since that is a little bit more risk than I normally take, my position size will ultimately be smaller. Pendulum, PDD, interesting. eBay's had a nice run. So I would go through the top 10 groups typically. I'm going to go through 2 more and then we'll talk about something else. Trade Desk, I'm an idiot. I looked at this stock several times over the last couple of weeks, and look what it did on earnings. A viable gap up. It's moved a long way. I don't like playing things that move that much. Look at the demand being high. What a beautiful stock. If you're in it, you hold it. I'm not sure if you chase it if you're not. Zillow had a big move. It's still below the 200-day moving average. It must have been on earnings. Kahuna. My buy sign. Interesting. I'm not a Zillow fan. PADS, interesting, breaking up to the 200. Mobile breakup from a squeeze, like JAS buy, a Kahuna. That looks interesting. Auto Home also looked good, crossing above the 200 with a new Kahuna green up top and earnings per share growth. Then lastly, I might look at some specialty pharma. We're going to look at Amarin as well because I like Amarin. I don't know ZSAN, big move up, gave the inside day on Friday. I'd probably do some reading on it. This one looks interesting. It's a very controversial stock. It's about benefits of fish oil, heart disease, a positive clinical trial. I look at this and what do I see? I see volume on Friday of 28 million shares and the average volume is 7. That should get your attention. I see a Bible gap up from a squeeze with a mobile breakout. I see a day after my buy signal came in, you could have bought it early in the day, and a Kahuna. I see group strength is strong. So how would I play Amarin? Again, I do the same thing. And since it had a big move, it's going to be far away. I already know that, which is a problem. So I know that it closed Friday at $20.50. I know I could look at the bottom of that day, which was $17.60, and put my stop a little bit below that, so say $17.50. So I would put a buy stop. I'd probably take it as long as it was above the close. And I work up every one of these stocks that I buy this way every weekend, so I know what I'm doing. So I'd put a buy stop above the close. We know the close was at 20.50, so I'll put a buy stop, say at 20.55. Maybe my son will listen to this and see that I like his stock because he has a nice position in it. And he actually bought it down here after the move up. Where am I going to put my stop? As I said, I'm going to go right below. It opened at 1765. The low was 1760. If it gets below 1755, I don't want to be in this stock. So that would be down here somewhere. Now, it is a problem because it had such a big move, and that will make my buy stop be a little bit more than I'm comfortable with. But that's how I would look at this trade as well. Now, optimally, you want to buy it before it's had that big of a move. Gosh, I wish there was a way to erase one day. So let's just go back and pretend we saw this here. In a squeeze, my combo indicator turned positive. The high was 1745. I would have bought at $17.50, and the low $17, $17.20, excuse me, $17.40. The low would probably be about $17. Now, if I bought on this day at $17.55 or something like that, I would have a 4 or 5% stop. The fact that I'm buying after it broke out is why my stop is so far. But that's how I start the analysis. If you look at last week, you'll see how I look at options versus stock. So those are some of the stocks that I like. Are there shorts? Yeah, it's hard for me to short markets where AD lines are at all-time new highs. But what I do is I go through a large list of stocks and I come up with some lists that I'm going to follow during the week. I have a buy watch, which I put out for you. You have to understand this buy watch, oopsie daisy, don't look at that list. I have to change it out to the right list. So some of these we've already looked at today. Some have been here for, wait a second. Never mind. Let me try that one more time. Let me bring in the right one. It went to where I brought it last week, so that's not what I want. So I'm going to File, Import Groups. Yeah, I don't want 217. I want 224. There it is. I planned on doing a short one. This went longer than I thought it would, but all right. The process of setting up a couple computers for people that bought them from me. So this was the buy watch list I put together. Let me bring it in here a little bit and let's look at industry groups. E-commerce discretionary. I told you I like Baba. I like Chegg, Etsy, JD. Looked at Hoya, IQII, and Weibo and Yandex. That was another group. BZUN is a stock that I've made some good money on this year. I have a bad habit of going back to stocks that have worked for me and not going back to stocks that I've lost money. It's kind of bottom fishing, but it's got my new buy signal, PSCI reversal, global breakup from a squeeze, Kahuna, and its Bongo weekly to green. And you can see the strong group of strength. This is another one of the Chinese stocks, so another story that's going to be dependent upon what happens with Trumpster and China negotiations. Solar stocks were strong. First Solar earnings didn't seem great, but it's held above its 200. You can see the group strength here coming out of a squeeze. It does have some earnings coming up, and earnings are not until April. A lot of these are names we've looked at already. Just want to see if there's anything that I like so much I wanted to show you. Car Gurus, it's a place I like to buy. You've got weekly bonds green, you got a pocket pivot and Kahuna, you're sitting right on the moving average. Why do I like to buy there? Because my buy is going to be somewhere around 42.60, and my stop 40.68 is the low there. Just see what the lowest 4 days would be. 40.10, 39.50. All right, 30. So we're going to put my low at 39. So I'm buying it at 42.60. I'm going to risk 360. So I'm risking about 9%. So it's a little bit less risk on this one. I guess it's just kind of compressed there. Now, I told you I liked Amarin, so before I buy anything, I would take it into my trade station and look at it with my advanced screener. And which I already did, and it's green down here, and I want to see if it'll work. And so this is what I'm going to look at. I see it broke through resistance. Here's support. High close doji last week, big move up weekly this week. This tells me to be a little careful because it's had a big move. OPV is heading up. New buy signal, again, that same red dot there, so it might backfill a little bit. OBV is heading up, came out of a squeeze. I think Amarin looks good. Let's see if there's anything here I like even better. I can't buy cigarette stocks. Those who know me personally know I'm a cancer doc. But here's Philip Morris. It pays a nice dividend. A buy signal on Wednesday, high close doji on Friday, high close doji on the weekly. OBV is weak on the weekly, but showing strength on the daily. This might be an early buy. I mentioned HUYA. It had a high close doji this week. It's got those red dots that might be concerning a little bit. Mentioned Etsy. Etsy broke above its resistance with a new buy signal. So I try and marry a lot of these things together. I like to get all these signals into HGSI. That would make my life easier. What I do on shorts is I'm not going to short any of these, but I'm going to watch them. And I pick these because these are stocks that look like you can see there's a lot of red there, but maybe they're going to break down. Here is InterDigital. This is a dividend play, and it looks like it's failing here. And I usually spend a lot of time looking at these on the ones I want to short. You see it's breaking down below the weekly 200. Dillard's going nowhere. Baidu. This one looks like it's turning down. Dollar Tree, probably not yet, but it's on my short list. If I look at a daily, you can see it's starting to break down. It had a new daily sell signal come in. Five Below looks the same. Dexcom, something happened on earnings. It's got everything turned red, a red candle high, mobile breakdown, pocket pivot to the downside, and kahuna to the downside. Let's look at the weekly. Here's an expensive stock breaking down with the weekly sell signal as well. Here's a ISO failure failing at the 50. It's likely to come down and test the 200. This is JB Hunt. Again, in a strong market, I'm not the first guy to go out and short stocks. I create this list, and if these things continue to break down, that'll stiffen up my interest in shorting stocks. So in summary, let's just pull up an index. I want to talk about one more thing. One of the things that's new in EdgeRater is the Mark Minervini template. You run it against your favorite list of stocks, and what it will give you is a list of stocks that are in powerful uptrends. I think you got a little bit over 200 right now that meet the criteria. I have found this to be a great tool for finding some stocks that are potential long-term winners. There's my favorite tandem. There's Amarin. All true means all the moving averages are met, and it's got some relative strength rank. And you go down to it turns no. And I typically will take everything above, and I will copy it into, I've already done, so I close it down. And I've got a thing here called Minervini stocks, just to give you an idea of what these stocks look like. See the index. That's the index. Remember we used to make an E-index? That's strong stocks. So these are stocks that are in uptrends above their moving averages. Some of them are extended. But I'm going to look for good stocks, some of them are takeouts, that pull back as part of their uptrends and buy them on breaks. So if you want to look for a list of healthy stocks instead of stocks that look like they're going to put on my short list, that might be something you want to play with. I cannot do that yet in HGSI. It's going to require some hard coding. I think George is going to do it anyways and set it up. So on that note, I want to say goodbye to everybody. I won't see you or hear from you or talk to you for about 4 or 5 weeks. The guys that have computers coming, they'll be out. My wife will mail them tomorrow. I'll send you some info on that. And thanks, everybody. Have a great weekend. And